Hello and welcome back to the Property and Finance Show. Your host KM Carlos Mentor, as always, and join with me. I'm very excited. We have the OG back. Not
What
sure why
OJ?
the audio is doing that. We have the OG back from property and lending from the original First Brick podcast from
2018 was it? Or
the guy that makes sure that I can pay my bills. Fadi Youssef from Power Loans.
yeah.
Welcome back.
Thank you. What an
Been
introduction.
been a long time, huh?
Been ages. I think that's why we're here to discuss that. Of reasons why.
Yeah, I mean, you've been pretending to be injured,
Yeah.
pretending to have children,
And broken and
telling me your
defeated.
your wife's spending all your money. I
Unbelievable.
can say it because she doesn't listen.
Yeah. and
Yesterday, you played soccer. You were graced with me on your team
yeah.
for the first time,
I had to had
and the
to
amount of shots you missed yesterday
I don't know, I was off. I was absolutely off. I got two goals but at the end, so
was pressure. Not easy having me on your
it's
team.
hard to play with greatness. So
That's true. I do it every week. Um, anyway,
yeah.
welcome back.
Thank you.
Good to have you. We've been talking about doing this podcast.
Yeah. And
Now we got gear. And
I
just
think
when
we've
you think
upgraded,
everything,
man.
yeah, well,
It
when you
looks
think
different.
everything's gonna work, the
Yeah.
camera doesn't.
Camera. Well, we're working on that.
So now we've got the Samsung. Hopefully, no one
Yeah.
calls me during this
And
recording.
we're still looking for sponsors, or
You're always looking for sponsors.
or-
We've already filled up 2 of the 4 spots.
yeah, yeah.
Yeah, so Power Loans and First Brick.
First brick. Yeah, yeah, yeah.
So if you are looking for if you want to sponsor the property and finance show, please reach out to our sponsorship team. You can email us at hello@firstbrick,
Yeah,
and you get a 30-second snippet
yeah.
on the pod.
We'll have them on.
We'll do a mid roll.
Yeah.
You can play every episode.
Why wouldn't you not go for
It's a no-brainer.
that?
We've got millions and millions of people
yeah.
listening. It's pretty much the Joe Rogan
Yeah, yeah.
show. Anyway, welcome back. It's been a while. Since it's been a while, I thought maybe let's just discuss um, where the market's at
Yeah.
from a lending perspective. Because obviously, I think last time we spoke on the podcast, rates were like 2%.
Yeah.
So times have changed. So do you want to just tell? Do you want to just discuss, I guess, where um, well, since our last conversations when rates were 2%, just after COVID, whatever, where have rates gone? Where are they at now? What's going on with interest rates?
And it's actually, and you would know as well, it's actually been absolutely nuts in regards to rates moving from what the I think I was on 1.98% at one stage. We had customers on 1.59 when at first the early rates came through. And then over the last 2 years, and I think pretty much the last year where everyone fixed those low rates for 4 or 5 years. Genius move. I wish I did the same thing as
Yes.
well. So we're seeing those customers come off, and it's pretty hard to see that you're going from a 1.98, let's say, to a how high the rates come up to an occupied 6.54%
Even in the sevens for
for
investment.
investment for investments into sevens. So it is a massive jump. So you see customers, men who are on, let's say, a $575,000 home loan, moving from $2,120 and moving up to, let's say, I think like $3,500, just over $3,500.
Yeah.
And that's on a $500,000 loan. So you can just imagine
Yeah.
the higher lending you've taken out. But nothing slowed down. And I think that's what we're beginning to realize, that nothing's actually slowed down. So people are coming off those lower interest rates, going on to high interest rates and able to manage it. Always comes down to, and I always say this, whether you come to Powerloans or not, it's always good to be in contact with your mortgage broker, because you never know what's out there. Another thing that we're also learning coming out of the lower interest rates, that no one knows what they're eligible for. They were just used to, let's have that sweet, cheap interest rate. But now moving forward, we're looking at workshopping deals. How do we look at, lending going up, obviously with income coming through, investment properties that are coming through as well. But like I said, it has not slowed down. It has not slowed down the market either.
Yeah.
So I guess my biggest question, and reason why I was so excited to do this today with you, especially, um, how's it looking all across Australia? Because right now in Sydney, as we can see, nothing slowed down. Everyone thought, the rate cut in February, was it?
Yeah.
We're gonna see the market go up, which it has in a way. I'm in the market at the moment, and we just nothing's absolutely slowed down. But people were thinking that the market was going to come down. Did we see that shift of coming down, or has it stabilized, or and how
No.
is it across the country?
Yeah, no, not really. Some markets. So some markets in Sydney haven't moved positively.
Yeah.
Um, but if they haven't, they've been pretty stagnant.
And what do you
Like
mean by that? But
there are areas in Sydney where they haven't grown,
yeah,
but they haven't dropped.
yeah,
The prices have stayed the same. But there are areas in Sydney, top end markets that have done really well. You know, I know you're looking for a place, and the markets you're looking at are moving positively as well. So
yeah,
so there are definitely areas that um, are producing, well, are still growing and have continued to grow. And then when we look outside of Sydney, um, Adelaide
yeah,
continues to go crazy.
yeah,
Brisbane still going hard. Perth had a huge run. Melbourne even starting to look like it's in recovery as well, starting to move positively. So yeah, even interest rates going up hasn't changed the market.
yeah,
Strange because obviously you have less borrowing power in general, and then the cash flow is not as good.
yeah,
But that's definitely something we noticed. Like a lot of our clients, like back in the day, people were like, oh yeah, positive cash flow, that. But now it's people are asking for it,
yeah,
and obviously we're having conversations around. Look, you're not going to be positive day one anymore, because especially even if you're putting 20% deposit, which a lot of people are not putting
yeah,
anymore. People are going 10 or 15 or 12, whatever. With the interest rates, it's impossible.
yeah,
Interest only, even on 20% deposit, it's not going to happen. So the market's still going strong, because I think these markets that we predominantly work in are still affordable markets. Like
yeah,
600 to 900k or 600 to 800k is still a very competitive market.
yeah,
Um, Still a lot of people interested in that price point. So markets haven't slowed down.
yeah.
And now that the rates have slightly dropped, I've seen sentiment increase.
Yeah.
So more people are interested. Um,
I think that's the biggest one,
yeah.
isn't it? Because that's what I'm seeing on every single week in open houses. That people have got that sentiment in regards to a lot more confidence, I guess, as well, going out there to purchase a property with the hope of the rates are just going to constantly go down from now on. Or is that,
Yeah, I think people made a lot of money during COVID, and held on to it, and people have been on the fence for a little while, not sure if they want to spend, get in, or whatnot. But now that the rate has dropped the first time, and I don't think we'll get another rate drop straight away. I think that would be irresponsible. But I think it might take a couple goes before the rates come down, a couple meetings. But I think if it comes down again, the sentiment will be very positive. People will get very confident. People will start relaxing, and being ready to spend. So if you are looking to buy,
yeah,
right, like you are, or lots of people are interested in buying. Do I buy now? Do I not buy now? I think it's actually. I know I always talk about timing. The market is not important,
yeah,
but if you are trying to, if you, you are deciding between now or in 3 months' time, and you can go, I think now is definitely better, because the prices will. Well, when the rates drop, people are going to jump in,
correct.
and it's going to be pretty chaotic, I think.
And isn't that the rule? When the rates drop, market goes up. Well, not so much a
Yeah.
rule, but that's how we've always seen it throughout history. Is that the rates do go down, we see the market shift go upwards, and when the rates go up,
Well, yeah,
the market goes down.
correct. I mean, it's the inverse. So rates go down, you
Yeah,
have more money.
yeah, correct.
Rates go up, you have less money. Rates go up, the economy is doing poorly, so people typically buy less.
Yeah,
Rates go down, market's doing well. People have more money to spend. I mean, the rates are going down for either two reasons: the economy is doing well, or it's not doing well at all,
yeah,
and they're trying to stimulate. Um, but yeah, I think if you're interested in buying a home or something to live in, for example, and you're thinking about now or 3 months,
yeah,
I would be looking. If I had the money to move now, I'd be looking now, because at that next rate drop, whether it's in 3 months or 6 months, the longer it goes without, the closer it gets to that rate drop, the sentiment is going to come back into the market, and you're just going to have a lot more competition. And no one was selling.
yeah.
There's no one selling.
And like you just pretty much said, is that everyone is pretty much ready. They've made money during COVID, or they've saved a lot of money during COVID, and they're on the fence, ready to pounce. And they're either waiting for the extra rate cut to come down, and they're going to be in competition with everyone else that's also been sitting on that fence, waiting to pounce.
Yeah.
And I think it always goes back to something that you've always said, and I used to hate at the beginning because I'm like, no, no, I'll wait. Maybe the market will go down.
Yeah.
No, 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 something's coming. But I reckon the best time to buy is when you can. And that's what I'm beginning to realize, especially in a market like this that's moving so fast. If I'm able to buy it today, I'm hoping that, I'm obviously going to be purchasing for a lower amount than I am going to be purchasing in another 2 to 3.
Yeah, for sure. Um, I mean, yes, a lot of people hate what I say.
Yeah.
Uh,
It took a
but
while for me to get it.
but it's just, if you can afford to buy
Yeah.
because the market's not going backwards.
Yeah.
You might have corrections and little dips and whatnot,
Yeah.
but overall, market's not going to go backwards. So,
Yeah.
you might as well run in.
Yeah.
Now, how have the banks reacted to? Well, I'm guessing. Well, we spoke about it. So when the rates were on the way up,
Yeah.
the banks were very reactive and they
Yeah.
were happy to pass on the increases.
Absolutely.
Um, but now that there has been a rate, have the banks passed that on? Have they been slow? Did they react quickly?
So I think we had that discussion. I think when the day the rate came down, the RBA announced the rates.
Yeah.
Our phones blew up. Like
Yeah.
I think every single broker's phone blew up.
Yeah.
But yeah, in saying that, okay, I think all the lenders have passed their rates up till now. Like we're obviously staying in contact with our customers. We're obviously doing further pricing with our customers as well on a quarterly basis, making sure they're on the best rate. But I think the banks, I think in this instance, everyone was waiting for this rate cut. So I'm guessing they all passed it. So they're not going to be dealing with the phone calls coming through. Why isn't my rate going down or anything like that as well?
Yeah.
But in saying that, like even when you were saying in regards to properties that are positively geared, I don't think the banks have slowed down. The banks are always going to, pass that rate down because eventually, like again, you have to be a proactive customer, have a proactive broker in regards to getting those rates down. But the banks haven't slowed down in regards to lending.
Yeah.
And what we've seen, and I think we've all seen in the last 2 years, is that we're working for a lot of proactive customers, a lot of more educated customers as well. And I think that comes down to working with people like you and a lot of referrers that we work with, accountants, financial planners. And we're seeing customers come through, whether they're purchasing a property under their personal name as an investment to take advantage of the negative gearing. They might be high income earners, or whatever it may be. Or now we're seeing new structures coming through, where like more not new structures that have always been around, but a lot more people are more aware of these structures, where corporate trust, buying under a corporate trust, where it's more asset protection, where you're not so much taking advantage of the negative gearing portion.
Yeah.
It's more asset protection and ways you can use current companies or ABNs that you've currently at the moment to take care of that cash flow as well to make it more positively geared. Um, we're also seeing SMSFs come through. SMSFs has been something like I don't know what it is this year. Is this something that everyone just figured out what an SMSF was this year, and everyone is purchasing under their self-managed super fund is what they call it.
Yeah.
We've seen a lot of movement with that, and it's interesting that you say that it's so hard to get a positively geared property where under the SMSF it has to be positively.
Yeah.
You don't get the lending unless it's positively geared, and they do off their assessment rates as well. And obviously, it's a lot more higher rates when it comes to whether you're buying a residential under your SMSF or a commercial under your SMSF. But we've seen a lot of people coming through using the SMSF funds in there to purchase investment properties, whether they've hit their maximum on their personal names, and they still looking to still invest in the market. They're now looking at other options, for example, SMSF. So in regards to that, say what when the rates what 1.982%, you could probably get away with just putting 20% deposit
Yeah.
down, get SMSF loan. That's positively geared. These days, you're seeing between 30 to sometimes just over 30% of a deposit that you're using out of the funds of your SMSF to purchase it
Mm.
to be positively.
Yeah.
But again, customers have not slowed down. A lot more proactive. The banks have definitely not slowed down. I just feel, man, ever since COVID, it's just a lot more options that we're getting from the banks. Whether it's through residential, we've seen a lot more through commercial. A lot more people again being proactive, purchasing commercial, purchasing businesses. So it's a crazy and awesome time to be alive, is because like I've never seen this. I've never seen where rates have gone up and the market has stayed the same, like you
Yeah.
said, stagnant, or again gone more positively geared in certain areas. Like I said, I'm in the market now, looking in certain areas that you grew up in, I went to school in, and then have you ever like what let's say 10, 15 years ago, would you ever thought the area that we grew up in would have
Nah.
been where we at today?
Nah. No way. You didn't. No.
No way. Like, but
Be
it's happened.
crazy to be.
Yeah, it would be nuts. Like if I told you 10, 15 years ago, you'd have to, purchase a property for 1.7 mil in that area.
sell a kidney.
You sell a kidney, but like you'd think, no way, you probably buy two properties with 1.7 mil.
Yeah,
Yeah,
yeah. 1.7 million for
yeah,
the area is pretty crazy.
yeah, yeah.
Um,
But that's what I'm saying. Like, it's a crazy time because we've seen rates go pretty high up. Like, we
yeah.
haven't seen like increases like that since 2009, 2010. And back then, what happened to the property market? That went
There was a slight dip. It wasn't a crash.
in '09.
It was in Australia.
In
Overseas, there was massive
massive,
crash.
but we saw a
Here,
lot more drop in
we did
'09.
have drops.
Yeah,
Um, but it was a pretty quick recovery as well.
absolutely. Yeah,
It
yeah.
didn't last long.
But this one, I didn't see any drop. Well,
No,
I
no.
didn't feel a drop.
Yeah, I mean Sydney and Melbourne overall dropped slightly
Yeah,
statistically, but Sydney is a big place, and this is what I always tell people: like the data doesn't tell a story when you're looking at such generalized data because Sydney, right? What comes under Sydney data?
yeah,
Campbelltown, Raby,
yeah.
St Helens Park, whatever,
Central
Roost,
Coast, everything.
but also Point Piper,
Yeah,
Vaucluse. You know,
and not everyone can live there. So,
where's the bloody star? What's that suburb?
Piedmont.
Piedmont.
Yeah, yeah, yeah,
All, like those suburbs all come under Sydney.
yeah.
So the data, okay, Sydney was like -1% or 0.5%, whatever it was over the last 12 months. But what does that really mean?
I was going to say that's really
Doesn't mean
hard to
anything.
believe, but in saying that, if you're including all those areas,
Yeah.
it's obviously going to bring it
So
down.
you got to look at it as a suburb by suburb
Yeah,
kind of thing. And then like if you look at, Bankstown went up,
yeah,
Parramatta went up. If you look at Liverpool, stagnant.
yeah,
If you look at like the major or mini CBDs,
yeah,
you can get a bit more of a story. Campbelltown went up. So you have areas that have performed, areas that didn't perform. But as a generalization, Sydney actually went down a bit, but you wouldn't have noticed
yeah,
because the areas that have dropped are not the areas that us common people buy in.
yeah.
You're
But
buying the $100 million property in Point Piper.
yeah,
So it's yeah, but it's funny you mention SMSF because I've also this year had the most amount of SMSF
yeah,
purchases come through. Maybe because they're from you,
yeah.
so it's correlated. But yeah, but you're right. There's a lot of options, and I think it's very important. And I know every time you or Mark are
Yeah.
on, we say the same thing: contact your broker, find out how much your rates get. But you know what? You literally before we started recording, you asked me, "Hey, did you check your rates? Did they come down?" And I said, "Oh yeah, nah." And you're like, "Oh, but I've done it for you." So it's something I think people should definitely do, especially if rates are coming down now. You don't
Yeah.
want to be stuck. My rates were over 7%, so
Yeah.
you don't want to be stuck paying 7,
Any
8,
cut makes a
9,
difference.
whatever.
Yeah,
Yeah, for sure. Especially because people are feeling the pinch.
yeah,
And a lot of my clients or a lot of people that want to buy are asking me, okay, well, cash flow is such a big discussion now
yeah,
because they've got one or they've got two, but they want to buy a third one. But if rates are still at 6.5, 7% retail,
yeah,
then they're going to be like, oh, it's a bit tight
yeah,
on cash flow. So cash flow is becoming a bigger and bigger conversation. And that's why we spoke about it so much 2 years ago and 3 years ago and last year 4 years ago when we were doing the podcast. We always kept saying cash flow is important, cash flow is important because the rates are not going to sit at 2% forever. So the people that planned and we bought those kinds of properties, yes, now they might not be positive,
yeah,
but they're fine. Whatever, $100 a week,
yeah.
$50 a week to own an
It's
asset
still
that's
going to
worth
benefit you as
800
well.
grand or something. It's
Yeah,
not a big deal. Um, so just regarding fixed rates, you mentioned it before. Um, so you said I wish I knew and I would have fixed my rates at 4%
or
or
five.
whatever. Right,
Yeah.
5.
My decision was fix my rate for 1 point, and this is the most embarrassing thing from
Yeah.
a broker, was 1.98 for 3 years or 2.18 for 5 years. And
Yeah.
at the time, I think everything was happening for me. I was getting married, buying a new house. I
Yeah,
had no
yeah.
money. And I'm like, I'll save the $60 a month, do it for 3 years. But yeah, like I said, people actually push it to 4 to 5 years
Yeah.
around the 1 point, and it's around the 2% average. Yeah.
Yeah. It's hard to know though because when you're in that moment,
Yeah.
obviously the fixed rate is usually higher than the
The
variable
variable,
rate.
yeah.
Um,
Not that time.
not that time.
Yeah.
Because it works inverse, right? So they're promising you a bit of a lower one and say, but you're gonna fix it. But you're thinking, oh well, the variable rate's gonna come down anyway.
Yeah.
But it's like right now, right? We wouldn't recommend anyone fix their rates, right?
So when we have a lot of people, because at the end of the day, the fixed rate, there's two reasons why people take it. One, it's a cheaper repayment, or it's lower for than the variable, which it is at the moment as well. So the fixed rates are lower than the variable at the moment, or just assurance that they know that the next 1 year or 24 months, this is my repayment. So you have a lot of people saying, we just want to know that the next 2 years, this is going to be our repayments because we've got other plans in the background, which is fair enough. But when we have customers calling up now and they're looking for the fixed rate, we're like, oh, how long are you looking to fix it for? Or how long do you think it's going to take for the RBA to bring the rates down? It's such a big discussion at the moment. Yeah.
Yeah, I think it's hard to like, because you're trying to predict the future, which is obviously impossible.
Yeah.
Um, but don't be hard on yourself, Fadi.
Yeah.
That was it. That's all I wanted to
Yeah.
say. Any indication on what the banks are going to be doing moving forward? I guess today was just a general conversation, but if someone's listening to this today and thinking, I want to buy a property, I want to invest, or I'm saving up or anything, any indication what the bank's products will look like in the next 3 months, for example?
But no, like I said, man, the banks haven't slowed down, and
Yeah,
the amount of options out there for everyone is absolutely crazy. Because there's always gonna be an option, whether you got an option today to get a home loan or a residential investment, commercial, whatever you're pretty much looking for, or we can work towards that goal, and that's something I guess that we talk a lot about. If you're not ready today, then let's get you in a position where you are going to be ready to at least invest in the market because you might not be far away, and that's something that we've realized over the last 3 to 4 years, customers actually don't know what position they're in. They just guess, oh, you know what, the market's it's too much, I can't afford.
yeah,
But they just don't know what position they're in and what they can actually have access to. So again, we go back to the SMSF people like, okay, if I've hit my maximum, what can I do now? If they've got like a referral partner around them or people like yourself around them, you know, you can probably purchase through a SMSF, an investment property for SMSF. People don't know that. So moving forward, I think, you know, again, I go back to that point, whether you get in contact with Powerloans or you get in contact with a local broker, just as long as you're seeing a mortgage broker, him or her is going to be able to give you a world of options instead of walking into a bank because that bank might, you know, you might be looking for a personal loan, a business loan, a commercial loan down the track, but that bank doesn't offer
yeah,
those options. It's always going to go back to, man, if you are thinking about getting into the market or you don't think you can afford to get in the market, have that conversation. It's a free call.
yeah,
It's a free borrowing capacity. It's a free conversation. It's conversations that we love having because at the end of the day, man, we love having people come through, asking us a million questions and putting through that process in regards to getting to their target, their goals and targets. Yeah.
for sure. I mean, I know I ask you a lot of questions
No.
when I want to get money. SMSF, I think we should do an SMSF podcast separate.
Absolutely. Yeah. Yeah.
Um, Maybe we'll get KG on,
Yeah.
financial planner, can talk to us about SMSF.
Because there's actually so much about that, and
Yeah,
KGB a good addition to explain, I guess, the regulations and laws behind it and
the
all that.
boring stuff.
The boring stuff that we
Yeah.
don't want to hear. But no, it'd be a really good because, like I said, we've seen a lot of them this year, and not
Yeah.
a lot of people are aware of, first
It's
of
a
all, what they
superpower.
are. Exactly, it's a superpower of what they are or how they work,
Yeah.
and the options actually there because you find people like, no, I'm done investing, but are you, or
Yeah.
you think you are done investing?
It's almost a free property.
Absolutely, bro.
I actually look at it as a free property.
Yeah.
But anyway, it's a
Let's
podcast
say
for
with the
another day because
SMSF.
we could speak
Yeah.
about that for an hour. And there's
Yeah. And don't get me
um,
wrong. So just to say, like the SMSF, and I always say this to all customers because everyone's like, "Oh, what about the rates or anything like that?" Obviously, the rates are going to be a little bit high because it is under a trust. It's it's under a separate entity. You're not going to see any of the fruits of this
yeah,
property anytime soon until you retire. So it's something like, do you know when you buy an investment property? And I told you this before we purchased our first investment property for you. I'm like, I just want to buy a property and I don't want to think about it.
yeah,
Literally, if you buy a property under your SMSF, besides getting the rental income coming through and like that, you do not have to think about it. And that's the aspect that I love about it. Purchase
yeah,
something, leave it in the background till you retire, and see what the fruits bear when it comes down to retirement.
yeah, for sure. Anything else you want to? No, we can wrap it up. Now, I really want to press this button. I want to see if it works.
I was expecting more.
I don't know if that's gonna come out on the recording or not, but if it doesn't, it's just people clapping.
Yeah.
All right, cool. Well, I think that was a good first episode back. General
Yeah.
chat. We'll do an SMSF one soon, and anything else that comes up, let Fadi or myself know. And as always, contact Fadi, contact Powerloans. If you have a loan, find out if your rates can get better,
Yeah.
or if your packaging get better. If you don't and you're interested, call them anyway, because you don't know until you speak to someone. You could be sitting on a bucket of money that you're not sure about. You might have equity that you can release. You might have different options. It's the days of 20% only loans are just deposits are not a thing anymore. There are so many options, and people call me every day saying, "Oh, I don't have any money. Oh, I can't borrow," and they've got all this money. I'm thinking, but in their mindset,
Yeah.
they don't know the options. So give them a call. Put their details in the show notes, and we'll snip this episode up and present it everywhere, and I'll send it to Fedi so you can post it everywhere and make sure our heads are all over the internet for a week or so.
Yeah.
As always, thank you for listening, and see you next time.